Good morning, everyone. Welcome to this year's Spring Grain Market Outlook. My name's David Eudall. I'm the Director of Economics at AHDB, and it is my pleasure to introduce our speakers today and run through what we have in store. If we could move on to the next slide, please, Maya. So for the rest of the morning, for the next hour or so, we have a run through of what's happening in the global market, and then a focus on the domestic side of things, what's in store for the next season, and where does the domestic market look from a supply and demand perspective. We'll also be updating on the follow-up conversations that we've had since our in-person grain market outlook briefing in November and the sessions that we ran around the country, just to update on the work that's ongoing and where we go from here. Just while we are here, we'll take a moment to go through the housekeeping. All attendees will be muted. We should be done within an hour and finishing at about 11:30. And we are going to record this and make it available. And as ever, there will be a feedback survey at the end of this. So please do fill that in to help us develop everything we do as we go forwards. Next slide, please, Maya. If I just explain how to answer questions, we will be taking questions at the end. We have a little question mark button that you will see in the top right of your screen, and then there's a chat function where your questions can be entered there. We'll now move on and without further ado kick off with our focus on the global market section, and for that I will hand over to my colleague Helen Plant and we will begin the discussion from here. So Helen, it's over to you.
Thank you, David. So yeah, 10 minutes, it's a lot to get in about the global market. So what I want to do this morning is pick out some of the key trends that are ongoing and some of the key watch points. If we could move on to the next slide, Maya. So getting started, why my title, An Uncertain and Volatile 2025-26? I think a lot of that comes back to what is currently happening with the global economy. Back in November, I presented some forecasts from the International Monetary Fund showing global economic growth for 25, forecast to be relatively flat at about 3.2%. Still a long way below pre-COVID levels as well. Since then, they've cut those forecasts back, now down to 2.8% this year, and they highlight a risk to that forecast, an intensifying downside risk, as they describe it. And I think, well, a lot of that comes from the changes we've seen to US trade policy, the introduction to tariffs, and then postponements and negotiations that are ongoing, creating uncertainty in the world around trade patterns, and then by default knock-on around demand levels too, not just for grains and oilseeds, but in terms of total economic growth as well. In the background, we still have, I think it's important we don't forget, the war in Ukraine ongoing, affecting supplies from one of our major producers and exporters. And while the negotiations of late have added a bearish undertone to the market, I think there is a while to go on that, and we will see some, it will be a factor for the months ahead as we look on. With all these changes in the world going on, we've seen some notable variations in currency. The dollar varying by trading in a more than 10% range above both the euro and sterling and euro varying against each other by more than 5%. We've also had volatile crude oil prices closing in a range there of nearly $20 a barrel, and now currently at some of the lowest levels since August 21 as well. So with all that going on, it's a lot that we can't influence and we can't affect. And I think this means it is going to be one of those years where we need to just keep a closer eye on markets, because things are going to be changing fast. Next slide, please, Maya. Okay, so then coming on to look at what's happening from a global grain supplying point of view in the coming season. These early forecasts from the International Grains Council show quite a finely balanced production and demand expected to match each other off as things stand. with recoveries in production after last year's challenges, but being met by increased demand, including increased feed demand for maize, as the lower prices trigger those margins looking more attractive worldwide. But it's not even across the grains. We are looking at the potential for wheat stocks to fall further globally, particularly from a major exporter's point of view as well. Barley looks more balanced, but I have to say that it's quite a fine balance. It's less than 1 million tonne surplus, and it is with a sort of lackluster demand picture given the ongoing challenges in malting demand and brewing demand worldwide. Meanwhile, maize expected to be in surplus, and as I show you in a second, that is going to be one of our key watch points. If we move on now to the next slide, we're looking here at the forecast year-on-year changes in production for the major exporting and producing nations. The year-on-year change in wheat in the blue bars, then green showing showing barley, and yellow for maize. And the couple of bits I wanted to highlight was the notable rise expected, or recovery rather, after last year's challenging weather in EU wheat and barley production. So whether they're going to be critical as we look ahead, especially given the drier conditions in Northern Europe of late. Moving into the Black Sea, for Russia and Ukraine, a much less of an increase coming through year on year, very similar to last year's levels currently forecast, following the difficult start that crops had with dry weather in the autumn. So while there is some variation in those forecasts, particularly Russia, the IGC here showing a small decrease in production, and local forecasts from such as ICAR showing a small increase of just over 1 million tonnes. Those are going to be critical as we look ahead, especially given there is now some rain in the forecast. And the final sort of bit to pick out there is around the US, particularly that maize crop. With the largest maize area in 12 years, we're looking at almost a 20 million tonne expected rise in production in US maize this year. So if we pull that together on the next slide then, that shows us there are sort of 3 key watch points from a grains perspective. We're looking at European rainfall levels, given the dryness that we've had and the challenges that poses for crops as they're into their main growing periods for winter crops now. For Black Sea, will this rainfall arrive, and how has some recent cold snaps affected crops there? And then watching those US maize prospects, planting currently going well and recent rain being beneficial, but we still have a couple of key points to come. Firstly, 30th of June, we get the confirmation of what area was actually planted in the States. And then we have the critical weather period of July, where hot, dry weather in July can create more adverse effects on yields than at any other point in the growing cycle. So those are my sort of 3 fundamental speaking watch points for grain. Moving on to oilseeds now. On to the next slide, please. And we're looking at year-on-year changes in the key sort of oilseeds here. Rapeseed in the blue, sunflower seed in the green, and then soybeans in the yellow. So starting with rapeseed and sunflower seed, again, we're seeing that European Union, those year-on-year increases as production rebounds after last year's weather challenges. And again, that is then a watch point given that drier profile that we've had over winter and into the early parts of spring. And again, thinking about that Black Sea weather conditions, looking at that expected rise in sunflower seed production in Ukraine, area expected to be up 5% year on year, after last autumn's dry weather limited rapeseed areas quite notably. But again, planting has not got off the easiest start for spring crops in Ukraine, so we're going to need to be watching those. Now, soybeans have had a more variable impact on rapeseed prices so far this year than in previous years, but I still think there is going to be impacts coming forward. US production down as some area switches to maize. But I think for soybeans, some of the critical watch points are going to come towards the later point of the year. For the US, we're looking then August weather for the impacts on yield, and August, September, October for soil moisture levels in the southern hemisphere as they get ready to plant through that early autumn period. If we move on then to just pull together our watch points for rapeseed and wider oilseeds, we're looking at those rainfall levels in Europe and Ukraine particularly. I also think it's worth noting that we've had a drier start in Australia as they're starting to plant, particularly in Western Australia, some of the key producing areas. And the forecast as we look ahead is certainly dry to the end of the month. There does look to be some rain in the long-term forecast through June, but then turning dry and hot again as we move through the rest of winter. So while production at the moment forecast to be relatively stable on the year, I do think there's a risk point there to keep an eye on. And the final one of my watch points for rapeseed and oilseeds comes from the demand side of things, and particularly biofuel demand. If you could skip on the slide, please, Maya. So strong biofuel demand has been a key sort of supportive factor of prices over the past year. But when we look at what's happening with US biofuel production, if you could move on the slide for me, please, Maya. There we go. We're looking at US biodiesel production there, and we can see that notable drop off in the early months of 25. That's following a policy change implemented by the previous US administration, but being carried on so far by the current one, and it's putting biofuel production down to the lowest levels in 10 years. So while there is uncertainty about the policies going forward, this, I think, is a watch point in terms of potential knock-on impacts for soya oil demand in the States and other imported vegetable and used cooking oil demand there as well, and then what that means coming through. So taking all of that together, if we can move to the final slide, please. We're looking at quite a finely balanced fundamental picture for grains, and on the face of it, that would then say to us, okay, this could be quite a nervy market over the next few months. But at the moment, we're not seeing that, and I think a lot of that is coming from this macroeconomic uncertainty and the bearish undertone that creates in the market. So yes, we have a lot of watch points, but we also have this what feels like greater than usual macro influence as well. From an oilseeds point of view, we're looking at a bit less certain of a picture, given we're earlier in the growing cycles for those crops, particularly from a soybean point of view. And we're just going to need to keep monitoring those as we go forward. Next key date for your diary will be the first forecasts of 25-26 supply and demand from the USDA, which are out on Monday evening at 5 o'clock. So thank you, and through them.
Thank you, Helen. So yeah, I'm now going to cover off the domestic side of things. So if we can just move on, please, Maya. Yeah, so I'm going to give a bit of an overview as to what's going on the domestic side of things. So a bit of a roundup as to what's been happening in this 24-25 season, but mainly focusing on the coming season, what we're sort of expecting from supply in 2025. So if we just move on to the first slide. So if we start off on the wheat side of things, so just to first explain this chart on the left-hand side. So we've got the 3 bars on the left, which basically shows us the opening stocks, production and imports, so our total availability for the season. And then the 3 bars on the right-hand side, which basically explain how we're going to consume that wheat, basically. So we headed into the season with just under 3 million tonnes of wheat, so a much heavier than average opening stocks figure. So on average, we'd probably see about 2 million tonnes of wheat opening stocks. And then we had that much smaller crop in harvest 24. So compared to the average over the last 5 years, we were at about 14 million tonnes, so obviously much smaller for obvious reasons last season. So on the back of that smaller crop, even though we headed into the season with heavier stocks, we were therefore a lot more reliant on a firm pace of imports coming into the country. So at the moment, we're estimating that by the end of the season, imports will have reached 2.7 million tonnes. So that's our sort of supply this season. In terms of how we're expecting to have used that or use that currently, we forecast human industrial consumption, so that includes sort of flour milling, bioethanol and starch, and also a bit of distilling in there as well. We forecast that down on the year, but actually relatively in line with average. That yearly decline comes from a slower demand from the bioethanol sector. That's largely on the back of sort of competitive US ethanol prices, so obviously weighing on our domestic price of bioethanol, and squeezing the margins and just making it less profitable to produce ethanol domestically. Also a bit of concern over sort of the Renewable Energy Directive and legislation around that and what that means for domestic wheat usage moving forward. Also, imported maize earlier in the season was quite competitive, so where possible we saw that being used quite a lot as well. On the animal feed side of things, we also are forecasting usage down on the year and also down a bit on average levels as well. So that's partially to do with obviously the smaller crop sort of reflects a smaller amount being fed on farm as well, and also that competitive maize price that I just spoke about on the H&I side as well. So taking that into account, despite a decline in the domestic consumption, because we had such a decline in supplies, that leaves us with a tighter balance on the year and also on sort of average levels. However, once we look at that balance and we take out the operating stock requirement, so that's the amount of wheat that we'll need at the start of next season to sort of see us through until we can start using new crop wheat. Once we've taken that out, because exports are so steady this season, so we're currently forecasting exports at 250,000 tonnes versus an average of about 750,000 tonnes. That low level of exports means that even though we've got a tighter balance, the stocks that we're heading out of this season with are much higher than what we'd usually expect. So that's going to be what we carry into next season. And therefore, I think in terms of stocks, we're going to be quite well supplied heading into 25-26. So if we just move on to barley as well, and just do a bit quick roundup on that side of things, if you can just move on to the next slide. So very similarly to wheat, we headed into the season with heavier than average opening stocks. We also had slightly below average production, but not far from average. We didn't obviously see the impact of the poorer growing season on barley as we did with wheat, because a lot of it being grown in the spring. But because of that slightly smaller crop, we were still probably more reliant on imports than we would be in a usual year. So that's the supply side of things. In terms of how we've consumed that, we are expecting a downturn in human industrial consumption of barley. So obviously that's largely brewing, malting and distilling. And that's on the back of fewer young people choosing to consume alcohol, the higher cost of living, fewer people going out to sort of bars and restaurants and buying alcohol out and about. On the animal feed side, however, it's a bit of a different picture. So we're actually we forecast this up on the year and also on the average. That's largely because it's just been more price competitive than wheat, so it's been included in a slightly higher rate than wheat within feed rations, and also use on farm in terms of what's being fed to animals on farm. We're expecting that to rise slightly because of that relative to wheat larger crop, and also some pressure on malting barley premiums, pushing that higher quality barley into more being fed for animal feed, basically. So again, similarly to wheat, this leaves us with a sort of tighter than average balance come the end of the season. However, because exports have been so steady and we're only estimating exports at 600,000 tonnes versus a usual rate of about 1.15 million tonnes, it again leaves us with very heavy stocks at the end of the season to head into the 25-26 year with. So that's just a bit of a summary of the current season. We're now going to have a quick look at production in Harvest 25 and a bit of a look at conditions at the moment. So if we just move on to the next slide, please. So on Friday, we had our latest crop condition report out. So basically, within this report, we get an idea of crop ratings as well as the sort of growth stage of the crop and how it's developing throughout the season. So on the left-hand side here, this shows the proportion of winter crops rated as in good or excellent condition. So what that means is it's the proportion of the crop that is either at a normal or above normal condition in terms of yield potential. So as you can see, compared to March across sort of winter wheat, winter barley and winter oats, we've seen a slight downturn in conditions, which maybe isn't too surprising given the drier conditions, but actually probably unsurprisingly again, we're in a much better position to where we were at the same point last season. And winter rapeseed was actually the only crop to see an improvement in conditions from the end of March. So this is now at the end of April, these scores. And of course, with the dry conditions that we've had over the last sort of 2 or 3 weeks, the impact of that dryness we might not see until sort of our next crop condition report at the end of May. So I think that'll be a really key watch point for us moving forward. On the right hand side, we've got the growth stages of the crops. So I think probably the key thing to point out here is winter barley. So that's the green bars. So you can see that a good proportion of that is now at the sort of flag leaf showing stage. And so for a bit of comparison, at the same point last year, about 26% of the winter barley crop was in that phase. So we're further ahead than where we were at this point last season in terms of winter barley. But actually for winter wheat, we're at a very similar point to where we were last season. So a little bit of a different picture between the cereals as well. In terms of regional variability, if we just move on to the next slide, we're seeing quite a lot of variation throughout the country. So that's obviously a lot to do with the weather conditions. So this map on the right hand side here, basically the darker that brown colour, the smaller the proportion of average rainfall that they've experienced in that area. So you can see basically up in Yorkshire and the northeast and northwest, they've had really, really dry conditions throughout April, whereas further in the southwest and in parts of Wales, actually there's been a surplus of what we'd usually expect, normal amounts of rainfall in that area. Meanwhile, in sort of the eastern regions and East Midlands, actually it's probably been the area that's been closest to normal, still largely dry in most regions, but sort of small patches that have been about standard for April. And we're seeing that reflected in those crop condition scores that we had out last week as well. So you can see in East Midlands and the eastern regions consistently across all the cereals, relatively good, sort of above that 70% of the crop in sort of normal or above normal condition at this point in the season. Scotland as well, looking really good, and we're hearing anecdotally that Scottish farmers are quite happy at the moment. I imagine if dryness continues, then there'll be concern up there as well. On the other hand, obviously we can see in Yorkshire and the Humber, that's the lowest winter wheat crop condition rating, and that probably makes sense given that map that we can see on the right hand side and the conditions that we've had there. So if we move on to look at spring crops very briefly, obviously it's quite difficult at this point in the season because a lot of the crops have only been planted in sort of the last month or so, and basically, therefore, it's quite difficult because some years we don't have, a lot of the crop hasn't emerged yet, and so we don't have ratings for them as such. So what I've tried to show on the left-hand side here is just how much further ahead we are in terms of the proportion of the crop that's established or emerged. So looking at April 23 and April 24, for example, if we were to look at spring barley, 67% and 48% of the crop in 23 and 24 hadn't yet emerged or hadn't been planted, versus this year when just 1% hadn't yet emerged. And from our survey of the areas that were under the survey, all of spring drilling had been complete, and actually we've heard that it's sort of been one of the best recent years for spring drilling. So generally, conditions were quite good throughout the drilling period, and actually a big proportion of those spring crops that have now emerged are in quite good condition. So 74% of that spring barley crop has been rated as being either normal or above normal in condition. However, again, there's a lot of regional variation, and I think a lot of the dryness in sort of the north and northeast in particular has caused a few issues for those spring crops establishing. So you can see where I've circled on the right hand side there, it's not that we don't have data or anything, it's that 0% of those crops have been rated as being in good or excellent condition. So in other words, it's all kind of below standard for what we'd expect at this point in the season. But again, East Midlands and Eastern regions not looking too bad on the whole. So that's a sort of overview of conditions, again with the caveat that, you know, appreciate we've had very dry weather over the last sort of week or two, and we could see it's probably likely that we'll see some change to those figures at the end of this month when we have the next report out as well. So if we now just move to looking at some production scenarios in terms of what those conditions mean for the production figures. So if we just move on to the next slide. So at the moment, the area figures that we're using are from the early bird survey of plantings and planting intentions that we carry out in early November, so obviously quite a while ago now. And then I've combined that with some different yield scenarios, so whether that's an average yield or the minimum yield that we've seen over the last 5 years or the maximum yield that we've seen. Now, after we carried out the survey in November, I think, you know, we heard anecdotally and also just from conversations with people in trade that actually the wheat figure was maybe didn't fully reflect the rebound that people are expecting to see this season. I think potentially with it being carried out in early November, you know, there was still a bit of pessimism over what farmers were going to be able to get into the ground and how much wheat they'd actually be able to plant. And actually, I think it was probably a bit better than what was expected. So we have adjusted that slightly up by 5%, and using that area figure and thinking about those crop conditions that we just had a look at, with the vast majority of, you know, the winter wheat crop being at normal or above normal, you know, we can use that as a bit of an indication that maybe we're looking above that sort of 13.1 up to sort of 14 million tonnes on the wheat crop scenario. Similarly, on the barley side of things, we've used the early bird survey area data, and then again, if we think about those crop conditions where we are at the moment, we could be about that sort of average to above average yield. But again, with it being very dry at the moment, those crop conditions are likely to change, could change. So sort of something that we need to keep an eye on, and that will obviously alter our sort of view on what we're expecting from production come 25. And then if we just move on to oats and rapeseed very quickly as well on the next slide. So for oats, I think generally we're not expecting to see massive change from harvest 24, probably around the sort of 1 million tonne mark again. On that side of things, for rapeseed, I think it's likely that we'll see another yearly decline. Obviously, it's on quite a sort of downwards trajectory at the moment with the sort of pest issues and issues with growing it in general, unless we see particularly good yields. But again, at the moment, it's not really looking like that's what we're going to see at the moment. We'll also say that at the moment we have our planting and variety survey, which is being conducted. So that will give us a more up-to-date area figure next month when we publish the results of that as well. So that will give us a clearer picture of what to expect on the production side. But for now, there are sort of thoughts on that side of things. So if we just move on to the next slide, I've obviously talked a little bit about stocks in terms of what we're leaving this season with and heading into next season with, and then a bit about production. So if we just bring those together and sort of compare to previous years where we are, it can give us a bit of an idea of how heavy supplies are overall as we head into next season, obviously excluding imports from that. But on the left-hand side, for wheat, you can see that basically those heavier stocks and also the slight rebound in the production figure. So this, at the moment, this is assuming an average yield. And in that case, we would see combined opening stocks and production back to sort of an average level for that period. So this would sort of indicate a lesser reliance on imports, but obviously that's with the caveat that that will sort of depend on quality as well. So if we struggle for domestic wheat quality, it could be that we end up having to import a bit of higher quality milling wheat again, similarly to the last couple of years, and also just how price competitive imports are as well. But generally, it would sort of indicate that we're less reliant on imports next season. On the barley side of things, not too dissimilar from where we've been the last couple of years, obviously a bit below the 5-year average, but also you've got to consider that within that 5-year average, we had a couple of quite large barley crops, over sort of 8 million tonnes in 2019 and 2020. So I think that sort of brings that average a bit higher, but actually we're not too dissimilar to where we've been the last couple of years. So that's the kind of overview of supply. I also just wanted quickly to have a look at the demand side of things. So if we just go on to the next slide, please. So I've just outlined a few of the key demand points. So some of these we've been monitoring this season are things that we're experiencing this season. Some of them are potential opportunities as we head into next season. So I think probably the key things on the animal feed side is we've had quite steady pig and poultry feed demand, and obviously poultry makes up a really big proportion of animal feed demand, especially on the compounding side, and also integrated units. So that's a really key watch point. On the other hand, we've had quite firm demand from cattle and sheep, but obviously, that makes up a slightly smaller proportion of demand. Also, as I mentioned previously, that competitive US ethanol price and just competitive imports coming in general, what could that mean for domestic bioethanol production? And that's definitely something that we're watching quite closely. Also on the BMD side of things, what long-term impact could we see from fewer young people consuming alcohol and that higher cost of living, and just less people choosing to spend money on alcohol? However, there are some opportunities which could benefit sort of demand within the UK. So, for example, on the oat side of things, Alpro, which I'm sure you've heard of, a really big sort of oat milk company, announced a few weeks ago that they will now be switching to totally British oats. So previously to that, only about 1% of oat milk sold in the UK was guaranteed to be produced using British oats. So this could offer an opportunity, and it's something that, again, we'll be sort of watching, monitoring how that sort of develops. Also yesterday, it was announced that the UK and India had finally come to an agreement of a trade deal, and obviously this could potentially benefit the UK whiskey industry. So at the moment, UK whiskey going into India had 150% tariff on those imports. That's now going to be halved to 75%, and actually within the next 10 years, it's expected to fall to 40%. And in 2024, India were actually the biggest importer of Scotch whisky in volume terms. So yeah, that has the potential to provide a lot of extra demand for the domestic market, and also either offset or even potentially outweigh the concern over trade with the US as well, on the back of the increase in tariffs on that side of things. And of course, we still have quite stable flour demand. We don't tend to see that fluctuate too much, with it being such a staple in everyone's diet. So that sort of covers off the demand side of things. So I think, just to summarise, if we just go to the last slide, to bring that all together, the current season, obviously we've had heavy reliance on imports due to those tighter supplies, largely to do with our production domestically. Even though we saw a yearly fall in domestic consumption, those tighter supplies outweighed that, and therefore we had a tighter balance. But actually, slower exports of both wheat and barley is leading to us ending the season with significant stocks to carry into next season. We're also expecting a rebound in grain production this season, following the really difficult growing season last year. But obviously, crop growth and condition is in focus at the moment with the drier weather that we've been having. And there's some potential for a bit of demand fluctuation, some opportunities there as well. So that's it from me. I'm going to pass over to Millie, who's going to talk about sort of continuing the conversation and a bit of an update on takeaways from the November GMO.
Thank you very much, Olivia. Thanks, Maya. So as Helen and Olivia have highlighted, we are living in somewhat unprecedented times. We have been actually for we've been surrounded by some level of uncertainty now for a number of years. In this section, I'm going to actually talk to you about what we have been doing and what we will be doing to try and help our levy payers navigate through these uncertain times. So I'll be giving an update on what we have been up to following our November's Grain Market Outlook conference, and what was requested from the attendees from us there, and what work we've been doing around that, and also what we have coming up over the next few months. And there'll also be an opportunity for you to have your say on what you want us to work on next, to help you and your businesses. So next slide, please, Maya. Thank you. So here on this slide, this basically in the boxes there on your left-hand side are just a number of a few key areas that we had raised by our attendees of the November Grain Market Outlook briefing that we held in Birmingham. So these are a few areas that were requested that we work on, and also it's just an update really on where we are with that and what work we've been doing. So firstly, if we look at biofuels and biofuels policy, so we have been keeping abreast of the situation around the UK's RED II recognition situation, and we published an update at the end of last year on the situation and where we're at. Obviously, this is something that we are watching closely. We've also done a number of pieces of analysis throughout the year since then on bioethanol demand, and we will continue to monitor that situation, because as Olivia mentioned, obviously there is at the moment somewhat uncertainty and pressure going on with very cheap US imports coming in, and there's been pressuring our domestic prices and the domestic market there. And with it being somewhat of a large demand centre for UK cereals, it is an area very much that we do monitor, and we are going to keep looking into and keep working on. We've also got we've been doing quite a lot of work on the reduced direct payments and the sort of switch to SFI. So we have our SFI landing page where we have all the information on there about all our up-to-date analysis, which is every time that something new is out or there's some specific announcement, we will update our analysis, and we've also got updated pieces of news and blog pieces on there to keep people informed of what is going on, hopefully in more simple terms. Got someone raised an interest in more analysis and data around UK soft wheat availability. As Olivia mentioned, and as I'll touch on more on the next slide, we will have the results of our planting and variety survey out next month. And this will give us the opportunity to be able to look into the more specific varieties and the more specific availability of this going forward. So we will be looking into different varieties, not just soft wheat. We'll be looking at all the varieties and looking at possible availability for next season. So again, obviously, this was, we held our conference in November. There's the talk on SFI and the impact on land use. Obviously, since then, it was announced that the government will be halting the uptake of the SFI scheme. We have got still update analysis on our website, and we're working on a model to possibly, or is in the pipelines, looking at a model where we will sort of as a calculator as such to help farmers see how much income they can get from SFI on their own farms and help them optimise different areas of their farm, because obviously while it's paused at the moment, when it reopens, I believe at the moment it's not expected to change significantly from the model that is used at the moment. So that's something that's currently in the pipelines to be ahead of the next opening next year. We've also had a call to do some more work around policy for other land use and food security. Now, this is actually obviously a key area of interest and a key topic. There's the DEFRA land use framework. AHDB as an organisation published its thoughts on that a couple of weeks ago. And we also have a number of pieces of work and a blog piece on our website, looking at the evidence behind the land use framework and our response on there. I will also touch on in a moment in the work that we've got coming up on the work that we're going to be doing and have been doing on food security. Next slide, please, Maya. So here, really, I'm just going to talk you through really our up and coming information that we have. So first off, I want to talk to you about the 2025 AHDB Planting and Variety Survey. So we run this survey every year, but this year is slightly more special because we are hoping to publish the results a month or so early. So this year we're aiming to publish the results of our Planting and Variety Survey on the Tuesday prior to cereals, and myself and Helen Plant will be presenting the findings from that survey at cereals on both Wednesday and Thursday. We currently have quite a good uptake for the survey, but you'll see here a QR code on screen. If you'd like to scan it, share it with your colleagues, with your friends, with your contacts, with your grower contacts, so we can get as much information as possible for the survey. I think this year, again, not harping back to unprecedented times, obviously 2024 we had the terrible autumn planting window. This year we had somewhat of a better autumn planting window, slightly mixed in some areas with the wet conditions. We're now going into this dry spell that we've had. While there is the question mark on what impact that could have on crop quality, I think it just highlights the evidence and the need to have this information available. The Planting and Variety Survey is the only survey available at this part of the season for the up and coming harvest. So with this information, we'll be able to take the latest crop condition information and make an educated projection for the up and coming harvest, and it'll be able to tell you how much is available for the coming season to help aid make better business decisions. So it's a really vital piece of information, so any participation is greatly appreciated, so please share far and wide. We also have up and coming, we have the UK cereal supply and demand balance sheet. So Olivia took you through just a moment ago the latest estimates for the 24-25 season from March. So the latest estimates will be released on the last Thursday of this month, which will give an updated view on the 24-25 season and actually how much we could possibly be carrying out into next season. Again, that combined with sort of the information from the Planting and Variety Survey and the crop conditions will give us a good view on actually what we may have available for next season to help navigate these somewhat unprecedented times. We have, as I mentioned on the previous slide, we've been doing some work with food security and obviously like linking with the government's land use framework. But actually in the next couple of weeks, our economics team will be releasing a piece of work which has been undertaken jointly with the Anderson Centre, looking at food security and looking at the relationship between food security and farming and what that means. So keep an eye out on our website because that will be up, like I say, hopefully within the next couple of weeks. It'll be a really interesting piece. And then also, I say finally, but we have obviously our daily and our weekly outputs, as well as, like I say, our various surveys that we put out throughout the year. But we will also be attending some events throughout the summer. So this year we're running a couple of, so as well as attending cereals, we are running a couple of recommended list plot days, where there'll be tours of the different plots. This is in June. There's 2 dates. One is just the week after cereals and one is the week after. If you check out our events page on our website, and our team will be there to give an update again on the planting and variety survey results, looking, and also a market update. So yeah, please join us there and please check out the website. Next slide, please. So I say finally, another QR code, but as I said, back in November, we welcomed our attendees of our Grain Market Outlook briefing to give their view on what they would like us to look at and what they would like us to do to help them navigate these somewhat challenging times. And again, today we would like to give you that opportunity to have your say and also give your opinion on what you would like us to start looking into and areas of work that you feel that would be beneficial to you. So please scan the QR code. It'll take you through to a Microsoft form, very easy to fill out, just a couple of boxes, and we will collate that and we will have a look, and again we will update you in our next Grain Market Outlook how we're getting on with those pieces of work. The forms link will also be sent out with the feedback form for today's event, so you'll have that opportunity if you're unable to scan the QR code now. So next slide, please, Maya, because it's just really to say thank you very much. And do we have any questions, which will open back out to the floor? So I'll hand back over to David now.
Thank you, Millie. Thank you for our presenters today. And we do indeed have some questions that have come through. I think the first one's quite a broad question and something that's very pertinent that we've asked for a number of years, but definitely sort of increases and decreasing depending on market conditions. So I think this is probably a question for Helen, if you're still there in the background, Helen, on a global scale. The question we have is how much are markets currently skewed by commodity derivatives being traded by financial institutions rather than physical fundamentals? So I suppose, is the market responding to physical fundamentals, or considering we've seen a move lower over the past few weeks, is that being exacerbated by financial trading, or is that a true reflection of where the physical fundamentals are?
I suppose the short answer is they do influence, but looking at the recent statistics, I would say I find it more that I think this is the wider world influence rather than necessarily too much from a financial trader's perspective influencing the prices. The funds have generally held or reduced their positions a little bit, both long and short, reduced some of their exposure, and there seems to be more of a shift into options trading away from some of the futures trading to, I suppose, reduce exposure from their point of view. So I think there is a lot of that sort of background macroeconomic that is influencing the market quite notably at the moment, not necessarily some of the supply and demand factors, because there is a lot of uncertainty about supply and demand. But where the uncertainty comes in, I suppose where I'm coming from is in terms of the trade flows, the demand levels, how does that wider world changes influence our markets in that way?
Great, thanks, Helen. We've made it just over 50 minutes in, and we haven't mentioned Donald Trump, but obviously all of the tariffs, etc., that creates volatility elsewhere in the world, doesn't like to shift those trade flows around and shift those money flows around between markets. And we've seen that previously, where if commodities aren't interested, then the money flows out of that market into the areas where there is a bit more volatility. But thank you. I suppose we've got a further question, a follow-up question, something that you mentioned, Millie, and I guess this is probably a question for yourself and Olivia, coming back to the questions around human and industrial usage and ethanol demand. And obviously there was the report out a few weeks ago around ABF and their expected decision to either close or mothball the Virgo plant. The question really is around actually sort of net importer and exporter status. How do you both think that any significant changes to the ethanol demand side would really change the net importer exporter status of UK wheat?
Shall I take this first, Olivia, and then you can chip in if needed? I think obviously we can't comment individually on the bioethanol plants. We know there's public knowledge that the Virgo can use or has the capacity to use 1 million tonnes of wheat per year. That can be imported or homegrown. And we can assume by looking at the other flour usage dates on the human industrial data sets that they have not been using said amount of wheat for some time. I think it's safe to assume that usage has been somewhat subdued for the last at least season, given the competitive nature. And as we're saying, obviously the announcement there from the pressure on prices and the cheap imports coming in. I don't believe that will have I don't necessarily believe, as it stands at the moment, if, for example, they went completely offline, and we need to remember that they were offline not that long ago as well, for a long period of time, casting our mind back to a couple of years ago. I don't believe it will have a shift in net importer exporter status as such. We have obviously shifted over the last 10 years from being a net exporter or trying to be a net exporter to being a net importer. And I don't believe that the shift there, and from if there was the loss of the demand centre there, that would shift anything. I think obviously we would have somewhat of a larger availability. But we could see that possibly swept up. We could see exports be slightly higher, and it could possibly be swept up from the animal feed side, because, as Olivia mentioned earlier, we have seen our largest sector being poultry. Poultry feed demand been relatively subdued the last few seasons, and I think looking at the longer term trends, it's only going to make sense that poultry feed demand is going to uptick at some point in the near future. Olivia, do you have anything you think I've missed at all?
No, nothing to add. I think like you said, I don't think we'll probably see major change to sort of trade on the back of it. I think maybe it'll just, we could see a bit more of a surplus of feed wheat, but like you say, it's likely that in response to that, we could see the relative price of feed wheat sort of drop against other cereals, for example. We could see a slightly higher usage in animal feed or something. So I think obviously it's more to do with how we price, whether we're export competitive, whether we can export that more so than how much grain we have available to export as such, to an extent. So yeah, I'd agree.
I think it's important to highlight, I say, when you say drop of feed wheat price, it'd probably be very much of a regional sort of disparity as well in terms of the demand centres. I don't think it would have a monumental drop in that impact prices domestically monumentally. I think it'd probably impact the regional prices as such.
Great, thank you both. As a further question, Olivia, in terms of the production estimates that you were discussing through earlier, if we talked in that sort of following that vein of sort of net importer exporter status, we've seen for a prolonged period that we've had a net importer status, as Millie mentioned, and we've seen a greater volatility in production over the past 5 years, from 9.5 to 15.5 million tonnes for wheat. Just focusing on the wheat, and I suppose the bigger questions around farmer productivity and profitability, how likely do you feel, irrespective of the demand side, how likely do you feel that we're going to see any significant change in the trend of what is essentially a smaller wheat crop over time from a regulatory and legislative point of view with support schemes, etc. Do you feel there's any chance, other than the odd year where we have really good weather, that wheat crop could start stretching back up to actually support any exports, or are we just in a position now where we simply just don't produce enough wheat to worry about the export market enough?
Yeah, I think it's interesting. I think this year I was quite surprised that we didn't see a bigger rebound back to those higher levels that we had sort of pre last season. Obviously we're expecting an increase, but not maybe back to where we were before last season. I think that was quite surprising from sort of a profitability point of view. When we look at margins and so on, it still appears as though wheat is the top of the list in terms of sort of profitability. But like you say, with other schemes and legislations coming in, is that sort of impacting that area? It's a bit difficult to say. I think obviously as well at the moment we've got the quality premiums aren't particularly high as well, so that's not really incentivizing growers to reach for those higher quality milling wheat crops as well. So yeah, and I think with more emphasis on rotations and different methods of farming within sort of regen ag as well and that kind of thing, I think all of these aspects are having a small impact, but in total they're obviously impacting the area. But I think, like you say, in terms of trade, I'm not sure there's much incentive there to sort of reach for becoming really key exporters again. I'm not sure that incentive is there. I don't know if Millie's got any differing opinion on that, but yeah, that's my sort of gut instinct.
No, I think you're right there. I don't think there is the I don't think, as David mentioned, sort of with that sort of, I say, this longer term trend of a somewhat slightly smaller, just sort of creeping down. I don't think we are now set up to become sort of exporters. We are now in a position where we export the surplus, if we can export the surplus, if we're competitive on that export market. And as sort of both Helen and Olivia covered off, it's very much sort of in the hands at the moment of what's going on in the wider geopolitical surface and what impact that has on currency. I think that's half the reason, also just sort of going off on a side note on imports, half the reason why we imported so much at the beginning of the season of high quality milling wheat and of maize is because it was cheaper to import, given the relationship of sterling to euro and sterling to dollar being a lot stronger. It was on the sort of import favour rather than export favour. So yeah, no, so short answer really on all the sort of short long answer on the fact that I don't think we will be back in a position where we will become sort of strong net exporters of wheat.
Great, thank you both. Unfortunately, we are running out of time and we only have a minute left, and I'm worried that well-spoken American lady that we all had at the start is going to come in and cut me off any moment. So before that happens, we better say thank you to Millie, Olivia and Helen for presenting today, as well as our colleagues in the background who have supported everything. As Millie said, we still have the planting survey, which is ongoing, and we would like to gather your feedback in terms of any kind of feedback that you have with regards to the work that we do and the products that we produce. So any questions or any other points, please do let us know. We'll make sure that our contact details are available, and this recording will go on the website as well, so it will be available for people to access. In the meantime, I'd like to just say thank you for your time today. Thank you for your interaction as ever, and I'm sure we'll see you all again very soon at another event in the future. Thank you.